Hey everyone, welcome back to the Noob Selling Options channel. Look, you're going to want to buckle up because the market is about to get really interesting. This week is absolutely jammed with catalysts, and in this explainer, we're going to walk through how to watch it all like a strategist. You can already feel it, right? The volatility is starting to spike, and for a very good reason. The week of April 20th through the 24th, it's a whole gauntlet of events that could really set the tone for the entire quarter. I mean, we're talking about a massive wave of tech earnings that's going to crash right into some super important economic data. It could shift the whole story the market is telling itself. So, the real question is, are you ready for it? Let's just break down what's coming.
All right, let's get organized. Here is your day-by-day watch list, the stuff that actually matters this week. So, the week kicks off with a big global signal on Monday, China's interest rate decision. That really sets the stage. Then on Tuesday, our focus snaps right back to the U.S. consumer with retail sales data, a huge tell on the economy's health. But you know, the real fireworks, they really start on Wednesday and Thursday. It's just a two-day onslaught of major earnings and critical economic reports like the manufacturing PMI.
And what's so fascinating here is just the sheer variety. On Wednesday, you've got ServiceNow, which gives us a pulse on what big companies are spending. That's absolutely crucial if you're running the wheel strategy on quality names. Then you have Tesla, a barometer for the whole EV space, and Boeing, which gives us an incredible window into complex global supply chains. And to top it off, Thursday brings us Intel, a fresh look at the all-important semiconductor landscape.
And you got to remember, all of this, it's really just the opening act. Because the next week, we get the AI fortresses, Microsoft and Alphabet. The market is going to start pricing in expectations for them this week based on everything we learn. So really, now is the perfect time to be looking at your longer-term positions, your leaps or your poor man's covered calls, before that main event kicks off.
So, this brings up a really important question. Why are we, as longer-term option sellers, watching all this so closely if we're not day traders? Well, it's all about learning to separate the actual signal from all the distracting noise out there.
And this slide just perfectly sums up the whole idea. The noise, that's being glued to one-minute charts, trying to scalp tiny moves, reacting to all the chatter. The signal, that's when you step back and observe the things that fundamentally drive the machine, the earnings prints, the macro data releases. It's about observing the system itself.
So, how do we actually find that signal? Well, it starts by understanding that the market is just one giant, interconnected machine, and learning how that machine works. Man, that's our biggest edge.
Think about it like this for a second. A single data point drops. Let's say it's that manufacturing PMI report on Thursday. Instantly, bond yields react to that news. That reaction then directly forces a repricing of valuations for all the big tech companies, which, in turn, causes the stocks themselves to move. Watching that chain reaction play out in real time, it's like watching a giant living puzzle solve itself.
Now, for us as options traders, this is where we get to observe the pure physics of volatility. We can literally watch implied volatility swell up to these massive levels right before an earnings report. And then, bam, we witness that violent IV crush the second the numbers are out, and all that uncertainty just vanishes. It is a real-time lesson in Vega, and options sensitivity to these big swings.
So you see, the whole point is that by watching these mechanics, not just the stock price flickering up and down, we become more strategic, more informed, and ultimately, just flat-out better investors.
I just love this quote because it perfectly captures the entire philosophy. We are not here to get stuck in the day-to-day traffic. We are here to understand the engine.
So why do we watch? Because it's a reality check, right? It's where our long-term ideas meet the cold, hard numbers. It's a live display of market psychology, fear and greed playing out right in front of us. And most importantly, it's an opportunity to calmly spot and capitalize on the wild overreactions, instead of getting swept up in them ourselves. Hey, if you find this whole strategic observer perspective valuable, do me a huge favor and hit that like button and subscribe to the channel. It just tells us you want more focused explainers just like this one. So I'll leave you with just one question to think about for the week ahead. When these reports drop, are you watching the numbers, which tell you where a company has been? Or are you listening closely to the guidance, which tells you where they think they're going? Let me know what you think in the comments. Thanks for watching.